The U.S. economy is maintaining upward momentum after posting solid growth in 2024. But are there some risks out there that threaten to derail the expansion? In today's video, we're going to look at the latest macroeconomic trends to assess the current health of the U.S. economy and look at some of the current risks that we will need to keep our eye on in the months ahead. Let's get into it. If you're new to this channel, my name is Eric and I am a professional economist in addition to being a licensed real estate agent, so I can bring you a unique perspective that you'll be hard-pressed to find on other YouTube channels. The U.S. housing market doesn't operate in a vacuum, and what happens in the broader economy can impact both the supply and demand sides of the housing market. So today we're looking at the economy's overall health and identifying some of the risks on the horizon that could spell trouble in 2025. Let's get right into the latest data to see how things are going. The latest data from the Bureau of Economic Analysis showed that real gross domestic product, a measure of our nation's economic output, closed out the year with solid growth. As of the fourth quarter of 2024, U.S. real GDP grew at a 2.3% annualized rate. This was down from the 3.1% growth in the third quarter, but was a respectable rate of growth nonetheless. For all of 2024, GDP grew by 2.8%. Consumer spending grew at a robust pace, increasing by 4.2%, its best gain since the first quarter of 2023. In terms of contributions to growth, almost all major components of GDP made positive contributions to the headline figure. Only private domestic investment was negative, and this was primarily due to a negative contribution from a change in private inventories, of which it is a subcomponent of investment. This is not cause for alarm, however, as business inventories increase and decrease over time on a regular basis, just as a normal part of doing business. Even international trade was a positive contribution this last quarter as imports declined from the prior quarter. Export growth was negative, but the positive contribution from declining imports offset that small decline. Overall, it was a solid GDP report for the fourth quarter and shows the U.S. economy is in steady expansion. The most recent data for the first quarter of 2025 suggests the economy has had a slow start to the new year. According to the U.S. Bureau of Labor Statistics, total non-farm payroll employment increased by 143,000 jobs in January, which was below expectations. January job creation was down from the 307,000 jobs in December and below the 261,000 jobs in November. It was also just under the 166,000 average for all of 2024. Not a great jobs report, but shows that the labor market continues to expand. The Bureau of Labor Statistics also released their annual revisions to the payroll employment data, which were revised lower by about 500,000 jobs last year. Not a great development, as it suggests the government has been overestimating how many jobs are created each month. Overall, the labor market remains tight as the number of job openings in the economy is still greater than the number of unemployed, which will help keep the unemployment rate at relatively low levels in the months ahead. The latest economic data shows the economy continues to expand and there are no signs of a recession in the immediate horizon. But there are risks out there that we have to keep our eye on. One risk that I've reported on regularly on this channel is a potential crash in the commercial real estate market. It hasn't happened yet, but if it did, it could trigger a significant banking crisis. I'll be providing another update on that in the weeks to come. Another set of risks that we need to watch is what happens with several of President Trump's policies that could have adverse effects on the economy. Trump has signaled he intends to carry out the mass deportation of millions of undocumented immigrants. Many of them are workers in the construction, agriculture, and leisure and hospitality industries. The removal of millions of people from the workforce would put downward pressure on economic output, and the removal of millions of spenders in the economy would put downward pressure on consumer spending. Our economy is particularly sensitive to changes in consumer spending as it makes up roughly 2/3 of total GDP. Trump's proposed tariffs have been regarded as inflationary by many economists. He recently paused a planned 25% tariff on imports from Canada and Mexico, two of our biggest trading partners, and it remains to be seen if they will be able to work out a deal. If not, and those tariffs go into effect, it could be a big blow to consumers and businesses alike. Trump himself has said that we may have to deal with some pain in order to get the concessions that he's trying to win from other countries. And then there's DOGE, the Department of Government Efficiency. Elon Musk has said he wants to cut $2 trillion from federal government spending. Such a large reduction in spending would be certain to have economic ramifications. These are all risks to the U.S. economy that we need to keep an eye on. It remains to be seen how much of this will actually happen. What do you think? Are Trump's policies a serious risk to the economy, or will they usher in a new era of economic prosperity? Let me know in the comment section down below. In the weeks and months to come, I'm going to be producing videos on each of these topics to provide a better sense of what the potential economic impact could be. If you don't want to miss those videos when they come out, make sure you are subscribed to this channel and hit that notification bell down below so you know right away when those videos comes out. And if you could do me a favor and hit that like button to support the channel and help it grow, it would be greatly appreciated. Thanks for stopping by. I'll see you in the next video.